Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, October 13th. It is 5:50 as I'm starting the video. And as always, run your player at 1.25x for maximum efficiency. Let's take a quick look at futures. Equities are toggling green, not a lot, about 0.25 to 0.5%. Oil's off 0.3. Copper's up 1.7%. Nat gas off 2%. We got a big day on the macro front. As you're probably aware, we've got the big CPI print at 8:30. Then we've got the Atlanta Fed that'll dovetail with that, with the Atlanta Fed inflation expectations. And then we've got a 30-year bond auction at 1 o'clock. Now, yesterday we had a 10-year that went off at 1 o'clock. No problem at all. I was reading a little bit about it. A lot of foreign buyer participation, namely Japan, came in. And whenever you've got that dynamic of having foreign buyers stepping up to the plate and bidding for those treasuries, you're going to have a good auction. It's when they disappear that things can go wild. So while we need to kind of watch the 30-year at 1 o'clock, I don't expect big fireworks unless CPI comes in crazy. That's going to affect bond rates. And then we've got the FOMC minutes at 2 o'clock today. So that may give us some insight at what was going on at the last meeting. Now we've got earnings starting to kick in a big way today. We've got J.P. Morgan, BlackRock, and Delta Airlines before the bell this morning. So those will be good reads on, of course, the financials and airlines, but industrials in general. And I was just thinking about it, as we approach the season, maybe this is a way that you can kind of look at earnings because we're all kind of looking at different things and have different ways to evaluate things or try to figure things out. Think of a box with 4 quadrants on it. And on one side, you've got profitable and unprofitable. And then on the other side, you've got physical world and virtual world. So that way, everything, each company should fit into one of those compartments, if you will. So we got physical world, virtual world. Then we've got profitable and unprofitable. So just for an example, FedEx would be physical world and profitable. So it goes in that box. Microsoft would be virtual world and profitable. A company like Peloton, while it does have the subscription business, which is, virtual world, in order to get that subscription, they need to ship a bike. So that would be physical world, unprofitable. They've got a negative PE of 130. So losing money operating in the physical world. And then I think a company like Pinterest, Pins, would be virtual world and unprofitable. I don't think they turn a profit. I have to look at that. But those are examples of how you can pigeonhole companies to kind of, where are they on the whole scope of things. And I think I think the ones you really got to watch out for in Q4, as we've been discussing, would be virtual world, unprofitable. Those are your bubble stocks. Big dreams, big aspirations, but losing money every quarter. Rising interest rate environment. I think those are going to have real trouble. And I'll be interested to watch out in the, as these releases come, what those in the physical world are saying about inflation. Because if we know that commodities are going bonkers, and basically, supply chain shortages and cost inputs are wreaking havoc on physical world companies. Now, we just had an announcement last night. I don't think I mentioned it. Apple is cutting their flagship iPhone production 10 million units. So here we are. I mean, I'm not an Apple expert. I don't know what their total phone production is. What I was told or heard through the grapevine, that's about 5% of production. That isn't, some monumental number. But, if another month goes by and then they say that again, heading into the Christmas season, we can't get everything that we want, or we can't get it here and out to the stores in time. You have to get a rain check at the Apple store if you want a phone. It's stand in line type situation. That's going to start having an effect. So I'm going to be watching that really, really closely. And another thing that you should set up to do, if you like those bracket trades like I do, when things get hot and heavy, I try to keep up with it, but it's not easy when you get 400 companies reporting over a day or two. Is sort for gaps. Most charting platforms give you the ability to sort for a gap. So these earnings can be really good trading opportunities once they produce a gap. So a gap and go scenario, it gaps higher, beat expectations, it gaps up, and then it can move in the direction of the gap. That's the typical way things work. And then if you have that alarmed and you add it to your list, and then you can alarm the levels in your platform, then you got a ready-made trade. And I'm going to do my best to give, spoon feed those to you, but you can add other criteria that you like to that gap scenario. Like for me, one of my very simple cuts is I don't want to see anything under $10, and I want to see a lot of volume. So I put that volume at 500,000, which is not really a lot in the whole scope of things, but that'll get rid of a lot of low price stocks that are thinly traded, and just let those go, and then focus on the bigger names that either beat or miss expectations. So that's going to be a good way to tackle earnings. Now, we had some developments on the ESG front yesterday that I want to share with you. The ECB just issued its first round of green bonds. ESG, green stamp bonds, and they were 11 times oversubscribed on their bond, their ESG bond auction. And the one thing that's kind of unique about this, in Europe, each country does its own thing with its bonds. So, there's Italian sovereign bonds, and we talk about the Bund, and we talk about the gilts in England, right? they all got their various bonds. Well, these are actually issued by the ECB, for the whole Eurozone. So now, and they went off, I don't know what the rate was, but it was a higher rate than like the German 10-year, the 10-year Bund. So the dynamic that's set up there is you've got a government-backed bond that's competing with the sovereign bonds, which is an odd thing, right? You've got an entity within an entity competing with your own, the individual country. So, but I think the thing is that, the oversubscription, 11 times oversubscribed. So I would expect a lot more of these green bond issuance to happen. Also, we had a big development on the nuclear front. I'm sure you're aware in Europe, they've got, we have a two-party system. In many countries over in Europe, it's like, an 8-party system. Everybody's got a little slice of the pie. And Finland announced that they were for nuclear power now instead of against it. So they flipped, right? Their Green Party in Finland had been staunchly against nuclear power in the past. Well, they just flipped yesterday. Well, it was announced. This, I guess, has been in the works for a while. But now, see, as fossil fuels become more and more expensive, people that used to be, because it's hitting them in the pocketbook, now all of a sudden, nuclear that they were staunchly against for 30 years have suddenly flipped. So uranium went nuts yesterday. So that, I think the whole dynamic with uranium and nuclear is flipping. We've been talking about it for a while. So I would keep an eye on that space. And also, as this green transformation gets really spun up again, watch the subsectors. EV cars, solar, copper, lithium, uranium, and conventional energy like coal and natural gas and oil. Why? Because of all the things that we've said. There's a war on carbon, and when there's a war on carbon, you're not going to invest in carbon, and when you don't invest in carbon, carbon goes up. Carbon pricing goes up. So that's why I expect oil to continue higher, and along with the whole commodity complex, because in order to do all this stuff, there's going to be a tremendous demand on commodities, and that's going to drive the inflation cycle. So, okay, enough of that. Let's move on real quick. If you're new here, new to the channel, thank you so much for stopping by. Hit the alarm bell, subscribe, hit the subscribe button, and then go over in the show notes, and there's a place where you can register. There's a link where you can go to the blog site and drop in your email and get all my content delivered directly to you. And then right here is a little extra information on the registration process that might make it a little more smooth for you. So here on the dollar, getting a little breakout. We're going to have to watch that because remember, rising dollar is a headwind to commodities. And if all of a sudden the dollar starts ripping, you might see commodities, oil, etc., pull back. Good bond auction yesterday, so yields pulled in a little bit, which obviously means that TLT was up a little bit. We've got this bear flag structure. that started looking real good. Had a little reversal candle there. So we're going to have to watch that and see what happens with CPI this morning, because if CPI inflation does a moonshot, or the Atlanta Fed inflation expectations does a moonshot, you're going to see a moonshot in rates. So be ready for that. VIX still right at our 20 pivot. I think this market's on a fine edge. And with VIX at 20, that's just putting an exclamation point on it. This is a chart that I've shown you before, and I just want to show it to you again. We have been tracking the NYSE percent over 50, and I look at the NASDAQ percent of stocks over 50. And we just went down here, which the prior time resulted in a big boomerang, but the last time this happened, we also had an oversold reading on the NIMO and the NAMO, the oscillators, and we don't have that this time. We just have oversold on percent over 50, and we have not really seen a sustainable bounce happen. So, but at least now there is a condition here where, it just doesn't go much lower. I mean, you look back over the years, it doesn't get much lower than 20-25% before it goes the other way. But we have just seen this drip, drip, drip lower, and we haven't had any signs that anything really wants to bounce yet and reverse. I think yesterday was pretty much a consolidation day across the board. I mean, 0.25% is nothing. But the thing I wanted to point out is, look at this bear flag structure, an impulsive move down followed by a consolidation. If this thing were to play out, you're coming down in here to the 430s, 429s. And then once you get to that point, I wouldn't be surprised if it came down here to retag these lows. So I think to alleviate that condition, you want to see price break above 436. And then you really need to get a break above 438, where this 50 EMA comes in on the daily. I think that's the key level. And then once we're above that 50 EMA, we can all breathe a little easier, as long as that holds, that price or the index is turning around. And we see that here on the SPY 30-minute chart. That impulsive move down. Here's the consolidation, very tight range for a day. You don't want to see big breaks go below 434, like I said, or else you're down here in the 430s and 427s. So let's watch that close today. And remember, you got a downtrend line coming in here as well. So there's a lot of congestion around this 438 area, and that'll be a good test for price to power through and then come up and try to get this gap filled. The Qs remain under pressure and underperforming. There wasn't a dramatic underperformance yesterday, but still there was. You could easily draw in a downtrend line off of this high, at the 50 where it got rejected, and have this come down here. And so, this is the start, or 3/4 of the way done, of that classic A, B, C move, where you could get a double bottom back down here around 351. And then you could have a setup for a double bottom with bullish divergence, because look, at this low, we were here in PPO at the lows, but now we're way up here. And what you would see is price come down and hold that prior low, and then start to have PPO start to curl up on the bounce, and then you'd have that bullish divergence. So that's something that I'm going to look for. And here it is on the 30-minute chart. I've been focused on the Qs at this 360 level. I don't think anything good happens under 360. It's got to reclaim that level and then make a move higher from there. I think this is it's set up to go lower. This is, bearish. It's set up to go lower. Now we have to see if it does or if it doesn't. But I don't really like this structure here. We'll just have to see what the reaction is to the CPI and all that stuff. And that could certainly be a catalyst for a reversal here in the pre-market. IWM, nothing. Just hanging out right here. Really no changes to discuss whatsoever, other than the fact that it's been outperforming, either less red than the others on a red day, or outperforming to the upside on a green day. And so while SPY and QQQ were down about 0.25 or 0.35%, IWM was up 0.55%. So the real key is right here at this 221.50 pivot point. I think that's going to work great if you're trying to actively trade it, or even swing trade it for that matter. And here it is on the 30-minute chart. Thing about being a technician is when you don't see a lot of stuff changing, you start drawing extra lines for something to do. Not that I am lacking for things to do, mind you, but we've got this little right triangle forming here. On the face of it, it's a bearish structure. Why? Because you're pressing against support, and if that support breaks, then it could come down and then retest this low. But on the bullish side, you get a break of this downtrend line and then a recapture of 222.50, then that turns it bullish. So anyways, just a little structure there to take a look at. Facebook, pronounced downtrend. You've got price wrestling with 322, and basically what you're seeing is this stock just sitting on its 200 EMA. If you go over to the daily chart, you'll see everything is piling up right around the 200 EMA, and it's got to hold. It's just got to hold at the 200, and it has so far. So from that standpoint, if you wanted to be long on a duration type trade or a long-term trade with Facebook, you can be long against the 200, and then you know what? If it breaks, you just exit your position with a relative paper cut, and you move on. Or you can either do that or flip bearish, because once you lose the 200, you're kind of on the wrong side of the chart. Apple's going to be in focus today because of that iPhone production cut. You may see a lot of the analyst houses start coming out and saying, oh, don't worry about it, or it's a big deal. So that's probably going to be in the news today. But it's at this important level at 141.50. Use that as your pivot. Break below opens the door for a move back down to test these lows. And of course, if it holds, that would be great. Move up. Because look, this has got the same kind of double bottom setup that I just talked about on the Qs. Why? You've got lows right here with PPO and RSI at the lows. But if this were to come down, retest these lows, what you'd see is PPO come down and dip, but still be at a much higher level than the first low. And then that would set up your bullish divergence on a double bottom setup. And I'll show you one here in a minute that's setting up that way. Tesla continues to look good. Nothing exciting. Probably a little frustrating. You know, I look in the trading room and pop my nose in here or there. You know, you got expensive options, and then the thing moves $5. You know, it's hard to make money that way. But you never know when it's going to be a $30 day or a $50 day. But what I can tell you from a technical perspective, it looks good. Impulsive move higher, consolidation, couple of false breakouts, trade up back through to recapture that 805 level, and now we're above. So that 805 becomes your support, and now you can look for higher ground. You've got rising momentum. You've got rising RSI. So those are supportive of higher prices. So from what I can tell, you can use 805 as your pivot on that. Microsoft, nothing day. Just in a real tight range between 293 and 294.50. I think those are your tradable levels. If you get a break back above 294.50, you can get long, and then keep your fingers crossed for a gap fill that would take you up to a little over 299. That would be a great trade. Capture a $5 move. Just realize at the bottom of the gap you'll have some resistance there. And by the same token, if you lose 293, if the Qs get real weak all of a sudden, then you've got 291, 289, and then you start looking like a continuation of the move down. And remember, we had this bearish trend, and you get down here back inside this channel. Of course, that would make all this look like it was fake, a failed breakout. Here was your move from the bottom. Here's your breakout. You want to see that hold and move higher. But if you were to come back down into this channel, then your target becomes the bottom of the channel, and then that brings it way, way down. So that keeps, these technical themes keep presenting themselves. When you break out of a channel, you don't want to go back in. Amazon 60-minute. And here's the thing that I was talking about. Amazon has been very weak. It's already below the 200 EMA that I've got here at 32.88. So you get a move down, then you get a consolidation, and then that sets up a scenario for a breakdown. So here's your A, flat flag, B, and then your third leg down, C. And what you usually find is a lot of symmetry in these setups. This is they say bull and bear flags fly at half staff. What does that mean? When you see them, when you see a bull flag and you're looking for a measured move, it's halfway to where it's going. And then when you flip that around to the bearish side, same thing. First move down, halfway, and then completion of the move. And notice the symmetry not only in the A, B, C move, but also in that lines up perfectly with a retest of the prior low. And then just like all the other ones, you would have PPO come down and then start to curl up at a higher level, then that would be your bullish divergence. Google had a nasty day yesterday. That's a mean candle. I did not dig down to figure out all the details, but again, you've got that bear flag structure, A, B, C, retest the prior low. So that's not being it's not inspiring a lot of confidence that this is going to be the big spot for a reversal. If it can break back above, 2750 and break higher out of this and come back up to the downtrend line and the gap, then fine. But just be wary of a break below when you've got this type of a structure. Netflix, like Tesla, looks totally different. We had a move up, consolidation. Now, yesterday, we marginally dropped out of this consolidation flag. I would watch that real close. You want to see that recapture 627.50, get back in that box. And if it can, that's a good place to get long because it dropped out of the box and then recaptured it. Your target is the far side of the box. So you would be, strapped in for a ride to 640. And if you have any luck, you get the breakout while you're, already long. But you gotta wait for that 627.50 to be recaptured. And then semiconductors. This is what I wanted to show you on that double bottom setup. So we had the move back down and created a low. PPO low, RSI low. We get a bounce that fails, and that bounce was 4.7%. So we get a bounce that fails, and we come back down to retest the low right here. But look at the position of PPO momentum and RSI. So we're at the second low, but at higher momentum and higher RSI. What you want to see here is, for that 249 to hold and to start moving off it. Now, in the double bottom structure, it doesn't officially trigger until price comes back up and takes out this level. And then your projected move is the height. So you got 4.7, and then I've projected out another 4.6, 4.7. That brings you right back up to 273. Now, the way a lot of people would play this is that if you think it's a double bottom with bullish divergence and you have confidence in that, why would you wait for price to get here when you could buy it here with a tight stop, right? So this whole thing is invalidated if price moves back down below 249. It didn't work. It did not work. So if you were interested in semis, you've got a great trade location here to take a shot long with the faith and knowledge that you've got a bullish divergence setting up on both the RSI and the PPO, and then ride this on up here towards 260, and then see if you can get the breakout. But at that point, even if you didn't, you would be $10 or $12 to the good on your trade. So that's the double bottom setup. And when you're flipping through your charts, when you see this setup like this, always look up top or wherever you've got your momentum and RSI indicators and see if the momentum is at and RSI is at a higher level, and then that gives you the double bottom setup. And also, just to turn that around, the double top setup is, when you've got two equal tops, but then the momentum is lower on the second top, right? The whole thing's flipped around. You've got bearish divergences on a double top versus bullish divergences on a double bottom. So let's wrap it up there. Big morning for macro. Let's see how CPI comes in. Thanks for your time. I hope you benefited from the content. This has been Chris Butts with Traders Profit Compass. Talk to you next time.